Good morning, delegates. I think for me, as the CEO of the Nairobi Securities Exchange, I'm very delighted to be here today to make this presentation to the East Africa Property Investment Summit. We are a bit unfortunate that this time around we'll not be able to do this through a physical appearance. But I think given the circumstances, it's quite good that we are still able to continue with this conference, which over the years has become a very critical part of a conversation that we have in the region. So my name is Jeff Adundo. I'm the CEO of the Nairobi Securities Exchange, and I'm very, very delighted to be invited to make this presentation to this particular summit. As we start this presentation, I think it's important to just highlight what are the key features of my presentation. So my focus area will be to provide you with insights about the NSE, what we're trying to do now in terms of the green bond market, which has become a very key imperative for the NSE. We are delighted to be in this space as an infrastructure provider and a product developer. And given the growth and traction of the green financing opportunities, we see a great potential for the property market in Kenya to tap into this. I will share key lessons learned from the listing of the first green bond in Kenya. This was a private sector green bond issued by a property company. So quite fits into this particular discussion because we have got key lessons learned and what areas that we believe will provide you with better insights as you look at exploiting this opportunity. We're also going to touch on key innovations that we've done in our markets, focusing more on the cooperative and the SACCO movement in our country, the Sukuk financing opportunity, and securitization of real estate property and how this can provide a better direction for us going forward. I'll highlight key developments around the real estate investment trust in Kenya, what were some of the regulatory challenges and the solutions that we've encountered when we were presenting this, and then hand over to you to really engage us in a Q&A session. So once again, it's a great privilege for us to be here as the Nairobi Securities Exchange. And I think this gives us an opportunity to once again re-establish our presence to you. Now, this particular conference comes at the year in which we are now executing our new strategy 2020-2024. We've just completed our 5-year strategy that began in 2015-2019, and that strategy focused more on building markets, coming up with products, and developing the profile of the exchange. Having successfully executed that particular strategy, we now have a new strategy 2024, whose key mission is to link opportunity to capital and basically enhancing shareholders' value. Why did we take this mission? We have now developed the products, put in place a renewed and robust infrastructure, and now it's about how do we encourage investors to look at the market as a funding channel and financing channel. For investors, look at the market as a wealth creator. And so we felt that we provide a strategic fit in providing that linkage between these two parties, whilst of course enhancing the value of our shareholders. Our vision is to now be a leading exchange and an investment partner of choice. We have been very deliberate in choosing partnership as a new pillar for the exchange. We are in that period where we realize that for us to develop markets and to grow, we need to work with others. And that's why partnership becomes a key part of us. So we are a leading exchange in East and Central Africa, among the top 5 in Africa in terms of size. We offer a world-class trading multi-asset class platform that today can trade over 6 different products. We pride ourselves as being at the forefront of innovation and providing cutting-edge technology-enabled products that have enabled us create a wide diversity and breadth for the exchange. Today, we serve a cross-segment of different clients, focusing on investors, where we have a very high level of retail activity taking place, a good level of institutional participation, both local and foreign. And these have enabled us to really come and serve the needs or the ever-changing needs of these investors. Critical to this, I must say that the exchange today enjoys a very deep pool of international capital. Last year, we were ranked the best frontier performing market by the MSCI, and we believe the incentives we've put in place continuously attracts investors to our markets. We also remain a prime market for issuers, especially for the new products. And as I like to highlight later, the new products have actually got support or have got issuers behind them. And this has given us encouragement to continue with this journey of deepening the market. Government is a key pillar for us. The sovereign debt market is very active. We are one of the most active sovereign debt markets in our country. And this has enabled the government to continuously raise capital domestically and make it a significant part of its budget financing year on year. We realize that given the amount of data we generate and aggregate, we provide a good avenue for our data clients. So today, our data vendors, our fund managers, our system support providers enjoy ability to create products with our data. And that's been a very key area for us. Training and consulting is becoming a key channel for us and a business line as well. Given the renewed focus on new products and areas of financial literacy, we have really refunctioned this department or this division to now provide high-level training and consulting, even in the region. We recently provided financial consulting in Rwanda and Burundi, and these have shown that we become a thought leader in the region. So this is really the focus that we've taken in the next period, and you'll see more and more of this going on. As highlighted, this is just a bit of a profile about us. Again, with a market cap today of 22 billion US dollars, it really positions us as a leading market in Africa, despite the challenging times we faced. I must confess that we have seen good activity on our market, even during this time, but it's largely because of the fundamentals and the incentive structure in place that continues to attract investors. We today have 62 listed companies and 2 other securities, an ETF and the Real Estate Investment Trust. And our companies are mapped onto the real sectors in our country, which again then enables us link the ability for you to understand our economic framework, because all the sectors in our economy are represented on the exchange. So if you really want to understand what's going on in any sector, your best window is actually to work in the exchange, because we map the real sectors of the economy. We are members of various associations and organizations in the world: the World Federation of Exchanges, Association of Future Markets. We're the headquarters of the African Securities Exchange. And again, all this helps us with better knowledge sharing, relationships among exchanges. And this has enabled us to develop new ideas as African markets, including the African Exchange Linkage Project, which aims to connect markets across Africa to allow for cross-border trading. So we're very happy with the developments happening in the capital markets in Africa, and we really will continue to play that role. Now, the green bond opportunity for us is really an area that we're taking with a lot of attention. Given the amount of global funding available for green bond opportunities, we believe that there is a great opportunity for Africa to tap into these opportunities. If you look at the distribution of the proceeds that are used through the proceeds that are used to raise money, energy and infrastructure represent close to 61% of this, as highlighted on the slide. And so I think there's need for a good financial intermediation through coming up with products and ways that we can encourage the development of these sectors. If you look at what happened in 2019, almost $898 million was able to be generated for financing opportunities in Africa. And I said that in Kenya we were very privileged to have the first private sector listing in our primary market and a cross listing in the UK through the Acorn Green Bond opportunity. Now, Acorn is a private sector player who is very active in development of student housing. And through the ability to raise money through a green bond, they have been able to expand the growth of student housing in Kenya. And that's student university housing, and that's been very, very critical. Kenya today has a great potential of energy, especially geothermal energy, which today is connected to our grid. And today, our what we consider green energy supplies almost 90%, 80 to 90% of our total. And so at the real pedestal of how we can enhance the use of sustainable financing to exploit more of these opportunities and just to improve our environment, infrastructure, and even address the SDG goals that are provided to us that we were encouraged to undertake as a global community. So just to connect this to the real estate and housing markets. So in February, we undertook to revise our listing rules to accommodate the green bonds. So the NSE bond listing rules were revised to put in place features that would address the requirements of a green bond. And this included the use of verifiers, for instance, in identifying green opportunities. We looked at the structure of these bonds, guarantee enhancements of this, credit enhancement of this bond, and also in terms of pricing structure. So all these were addressed in our listing rules. Now, through the development of this and through the support of the Capital Markets Authority, we were then able to get approvals that have enabled issuers to consider raising green bonds in the market. And hence, Acorn was one of them. Now, at the moment, we have the sovereign, the government is also working on a possibility of a sovereign green bond. And this, again, has been facilitated by the ability for us to have regulations and rules that can enable that to happen. What are some of the benefits that we see for issuers? I want to just be very, very clear about this. Now, I think the new commercial imperative today is whatever business we do, it must be purpose-driven, it must be people-driven, and it must basically, of course, be profit-driven. But I think despite the fact that we want to be commercial, but there's need for us to be very, very conscious about how we want to do that business. So we believe the green bond provides you ability to raise capital, and really affordable capital, that can enhance the development of housing, especially green housing. And so that is one of the key benefits. We've seen you get very attractive pricing. It's more patient capital, and hence can help you undertake longer term projects. It has a strong attraction to a unique investor base, especially the social impact investors. And even some of the international fund managers have today allocated a particular allocation for purposes of green bond financing. We've seen a high level of diversification. It helps the fund managers diversify their portfolios. It provides a good asset liability match, especially for longer term projects, as I highlighted earlier, and really enhances the reputation of the real estate housing. I think in our country, we've seen policy direction towards use of solar power in our new project. And even with the affordable housing agenda, a lot of the green financing opportunities are being used to support the development of this particular sector and to achieve the agenda. For investors, I think the returns are comparable, albeit a bit lower, but they are comparable. They provide a good hedge from a climate policy perspective. They address some of the critical needs you have under your SDG requirements. This becomes a tangible output that you are trying to achieve under your SDG goals. We believe that they improve the greening of brown sectors by providing a clear-cut ability for you to actually convert these brown sectors into green projects. And we believe that this is in alignment with the global Paris Agreement on how we want to enhance the use of green financing to support growth and development of our countries. I think looking at the trends, we're seeing increased issuance of green financing opportunities, and hence we believe this is a good direction that people in the real estate sector should undertake for the future growth of their businesses. Now, with the issuance of ACON, being our debut issue in the Kenyan market, we got to learn some key lessons that have prepared us for future issuances. The first one was the enhancement of investor confidence. This was a new issue. The Kenyan market has primarily been very commercial bond driven. We've had a very good growth in corporate and sovereign bonds, and that was the understanding. And so, bringing this opportunity, there was need for us to really encourage even fund managers to understand and provide confidence for them to consider investing in this particular product. And this involved a deep understanding of what the projects are, how they're undertaken and executed, and how do these fit within the from a de-risking perspective. And that was very, very critical. It involved us doing a lot of book building, talking to investors, one-on-one roadshows to just explain the opportunity. And I must say that it went extremely well, where we saw even local fund managers taking some level of exposure. It provided good technical ability for our even local advisors, analyzing how to analyze these issuances, how to structure them. I think this was a very interesting structured issue. It was a drawdown structure with certain levels of commitments that have to be undertaken with any subsequent issue. So the structure was unique, and it called for understanding of a lot of areas on how these instruments can be structured. I think the other thing that it helped us is about the rating. The use of rating in our bonds took place for the first time on this particular issuance. Interestingly, the rating was actually very, very good rating. That was at some point at a higher level than even the existing sovereign rating. And so I think rating will be a very key feature for even commercial bond issuances, because it provides investors with a high level of assurance, given that the amount of due diligence the issuer goes through a rating process helps provide more transparency, better understanding of the company, and really, really better insights before you can actually commit to investing. This was an issue that was credit enhanced through GuarantCo and a number of other providers. And so guarantees become another feature that we believe will also help the growth and development of green bonds. And given the recent developments in our country around the bond market, the use of credit enhancement is actually one of the solutions for us to help the bond market achieve a high level of growth and recovery. There was a lot of public education and information sharing to help investors understand what the green bond opportunities are and how they are structured. As I said, credit rating became a very important part of this, and we saw a high level of interest from investors once the rating features were put into the whole structure. So we had some very interesting lessons out of this particular debut issue, with an opportunity as well for the issuer to really be called upon at various forums to provide the personal insights and how they were able to achieve this and execute this particular mandate. And so we are very proud to have been associated with this particular debut issue, and we look forward to the clients coming to the market for more and more capital. Now, the green bond opportunity was one area that we saw a high level of success, and that has encouraged us to really look at the other segments or other opportunities that we believe will continue to evolve in our market to finance the real estate sector. The first area that we felt is a new field for investors to exploit, or for real estate practitioners to exploit, is by working with the cooperative movement. Now, the cooperative movement in Kenya happens to be the largest in Africa. Today, we have almost 25% of the Kenyan population in some level of credit union or SACCO, what we call a savings union, savings structure. And this constitutes, in terms of assets, almost 6% of our GDP. These credit unions that we've set up over the years today are very active in supporting development of real estate in Kenya. Through their operations, we've seen a lot of them evolve to become even microfinancial institutions at the areas in which they operate. And today, Kenya has over 10,000 SACCOs in the country who are providing financing needs for investors. And a large proportion of these investors are actually borrowing financing for development of real estate. Now, in that scenario, I think there's an opportunity for real estate developers to work with the credit unions who not only have funding, but they also have available land to be able to work together and develop these opportunities and provide the required housing development in our country. We currently have a huge demand for housing, and I believe this particular funding channel is very attractive. It is patient, it is long-term, it's affordable. And this is one area that we want to work closely to work and develop a platform for them to actually allow them to also trade on their shares, as well as generate funding for potential investors. The second area is around Islamic financing. Now, in Kenya, for instance, we have a very large Muslim population that are looking for assets that they can invest in. Now, given the unique structure of this particular product, the most desirable opportunity is real estate, given that it provides income, fee income, as opposed to interest income. And so the Islamic financing opportunity through Sukuk will provide a great opportunity for real estate investors to exploit. We believe that we are working together with the CMA to come up with the final regulations around the structure of Islamic finance products. And we believe this is going to be another area that can be explored for the real estate sector. So Sukuks is an area that we're keen on, and we're working very closely with the CMA, the project management team, and others to develop this particular product. The other area that we foresee becoming a key area is around the securitization of really how we can create more assets around the real estate opportunity. And as I will highlight later on the slide, I think we have put in regulations that can allow the issuers of asset-backed securities. Conversations around mortgage-backed securities are also going on. We have the real estate investment trust regulations that allow you to issue new securities. And so this is a very, very evolving area, and we believe that these innovative solutions will help support the growth and development of the real estate sector. As a segue to the earlier slide, I wanted to highlight the key area around real estate investment trust. So we developed this market in 2015, and we were honored to launch the market with a product, which was a REIT. And the REIT that we launched was a composite REIT comprising of commercial property, office blocks, and some private development. And since the launch of that particular REIT, we've seen good revenue returns coming back to investors. Our incentive structure around the REIT market has been extremely attractive, where we have allowed distributions of rental income after expenses to be tax-free, and this has enabled investors enjoy some very good returns. We have incentive structures that allow for transfer of assets into real estate that without stamp duty. especially for residential for now. And also, we've allowed a pass-through tax incentive to SPVs that actually do develop, who do undertake a REIT structure. We are conscious that there's been some changes in our tax framework that affect the commercial side, but we continuously engage with the government to get a good policy direction towards making this a very attractive opportunity. What has been the experience around the real estate investment trust since 2015? So we've seen increased investor interest coming through it because of the ability and the liquidity that they provide. As I mentioned, the exemptions are available and the transparency. And so for pension funds, for retail investors, these provide a very, very good access opportunity. For developers, we've seen ability to raise relatively low-cost capital and also reduce cost structures. So we are not yet there. We must confess there's a lot we can do to make real estate investment trusts an attractive opportunity. We are continuously engaging with government, especially the structuring costs, trying to see how we can address the structuring costs to make them better. But what better way to do this but to have an existing experience where we're able to share data with the policymakers and really, really build a good understanding for them to understand that this particular sector does present a great opportunity for development of property investments, and hence the need for us to work together to achieve a high level of growth through the REIT structure. So what are some of the areas that we saw as we were able to develop this product? One is that there was a critical need for us to align regulations in the region to spearhead the growth of this particular sector. And key here will be how can we harmonize regulations around taxation, around how do you borrow and accumulate debt. And these are some of the initiatives that we believe that will help really, really grow this particular sector. Now, as the NSC, we have always been sort of the regional hub for investments. We have the deepest market in the region, and also the market that is able to develop and test products because of really our size, our ability, and capacity. And so through that understanding, we are then able to share this with our regional partners. Working under the East African Association, we believe as the largest market in the region, the thought leadership and the ability for us to test products, we must allow that to permeate in the rest of the exchanges in East Africa and in Africa as a whole to really support the growth. So aligning our regulation was a critical part and remains a critical part because as we are still in the journey, we want to make this a very key asset class. So it's going to remain a key focus area for us. The other thing is knowledge of our products. Now, bringing a product is one thing, but building a knowledge of it is another. And so we are focusing mainly on public education, engaging also with fund managers and other advisors and investors to build an understanding and get their feedback as to what can help enhance their interest into this product. And so this is how we can achieve better growth of real estate investment trusts in our region. Now, the lead time to market and process and the structure is an area that I think has to be addressed. One of the challenges our REITs market has faced is the cost of putting together a REIT. And this is an area that we want to see how we can simplify, make it more cost effective, and really shorten the lead time for allowing these issuances to come to the market. I think we've seen, we've been able to assess the performance of the REIT market in the last 3-4 years, whereas we have seen a high level of better competing returns from other asset classes. I believe, or we believe, in the long run, this provides not only a return, but a better secured asset, given that the underlying asset is property. And so it continuously, I think in the long run, having a mix of those two benefits makes it a very attractive asset class. And we believe this is how the property sector will be owned in the future. We've looked at global trends where in other markets you find the real estate investment trust has better uptake, and we believe it's just a matter of time for both Kenya, East Africa, and Africa to adapt real estate as the new way or innovative way of owning real estate. So in summary, and basically capping onto my discussion, I think I've talked about who the exchange is, how do we fit into the space, and what role do we play in the real estate sector. And I want to emphasize that our focus is not to remain an exchange for trading of equities or bonds, but is really to become an avenue or a venue for capital raising, to really support the growth and transformation of the East African and African markets. And so we have ability to develop solutions or tailor-make solutions that will help address the various and respective needs of various investors. And so we believe that through this approach, we'll be able to provide you the more desirable avenue for raising capital. I want to highlight again, in terms of the offerings, we have a wide pool of offerings. The Real Estate Investment Trust is a product we believe can achieve a lot in the region, and it should be exploited by real estate practitioners and developers if we're going to help transform the growth of our region and our continent to be a leading player in the world space. So once again, I want to thank all of you for giving us the opportunity to make this presentation to this East African Property Investment Summit, and we really, really appreciate the partnership that we have with you and look forward to really working with you as we go ahead into the future. Thank you once again, and I'll be glad to take your questions. Thank you very much.